Good morning, traders and investors. Steve Ganz here with a weekend update and market outlook, where I take a look at the major indexes and how they're currently acting and what we might expect from them going forward. But you can see that over a significant period of time here, let me just turn on my drawing tool. We've been in a very solid uptrending channel in the SPX. Now, so that continues to largely be intact at this point. And you'll notice that here a couple of weeks ago, when we were right in this area, I said, if we break this resistance, we're likely to drop down to this support area. That was my expectation. Late last week, we did exactly that. We dropped down to it. We actually dropped through it a little bit. But by the end of the day, we had recovered significantly and we're back up in this general range. Since then, we rallied back up, and with technical analysis, one of the things we'll see is some common themes or common areas where when the market rallies back up, many times what used to be support here in this case, what used to be support can become resistance and can reject that back down. And that seems to be exactly what happened here. Now, I will also say that last week, light week with Christmas, next week, likely to also be a light week with New Year or a short week. We don't have lots of professionals in the market at this stage, so we're seeing that volume is way down on those current days. We had a big volume day here just going into the holidays where there was lots of maneuvering, lots of year-end adjusting, things along those lines that the big hedge funds and the market makers were doing. But again, we get down here to this week, very light volume. And I said last week, going into this week, and next week for that matter, that I don't totally trust any of the movements that we get during this week and next week, because they're largely fueled by individual investors. They're not necessarily fueled by what I'll call smart money or the big funds or institutions. So I certainly keep an eye on what's happening there, but I don't place a huge amount of credence on it. So my expectations for this coming week is that we're probably going to continue, chopping sideways within this range. Then as we get to the following week, again, not this coming week, but the following week, when all the traders and the hedge funds are back in full swing here at the start of 20. Then the movements we get, I'm going to place a little more credence on. I'm going to pay a little closer attention to them. That's where we're at right now with SPX. Again, nothing major, just looking at some sideways chop there, most likely. Then I also want to look at VIX, the volatility index. That also many times will give us some clues. And we'll see here on the volatility index, if we take a look at it, this is essentially a measure of fear in the market. The higher this goes, the more fear we have in the market. Right now, there just simply isn't a great deal of fear in the market. A couple weeks ago, we had that spike as our market sold off. But right now, we're back near pretty much all-time recent lows as far as volatility goes. So that, again, is telling us, you know what, there's not a lot of people buying insurance on their portfolios right now. And since there's not a lot of people buying insurance, that indicates that there's just not a significant amount of fear in the market. Now, let's look at the RUT index, which is the small cap 2000 index. Similar story here. It has been trading also in this very wide ranging channel for a significant amount of time. All indications are that I would expect this to remain in its channel. We see here that we did have what I would have called a support level right in this area that also failed there for a day or two. Then we rallied right back to it. Now it's acting as resistance. So if we do sell off from there, I could expect a sell-off back down into this area. If we get that sell-off again, I'm not sure we will. I would more likely expect us to maybe rally back up into this range and chop back and forth in this range here. But again, a break is not out of the question here. If that were to break, while it does come out of the channel a little bit, I would expect it to maybe come down to this level of support and then bounce off of that. We can see that at different times, these lines aren't perfect, but the few days that it did come outside of these general channel lines that I've drawn, it's rebounded back into that channel fairly quickly. That's what I'm looking at on RUT. And let's take a quick look at the volatility for RUT. Now that symbol is RVX, Russell volatility. And there's a couple different symbols here, so we need to make sure that I select the right one here. And again, very similar story we've got here in that we did have a spike in volatility when we had that big sell-off a few days ago. But now we're back down here to almost all-time lows in the volatility index for Russell, which also again tells us or indicates to us that at this stage, there's not really much fear in our market out there. At the end of the day, the market is looking pretty stable. I would say that I am neutral to bullish at this stage still. But again, that also is going to really be dependent on what the market looks like the first full week of January when the professionals, the hedge fund managers, et cetera, get back into their offices and we see what might transpire at that time. That's really going to be the full indicator for me. So with that wraps up our market outlook for the day. Thanks so much for looking in on it. Now, for those of you that are part of the alert service, let's go in and take a look at our various positions. I also want to point out that if people are seeing this and you are not part of the alert service, right at this moment, I do have a special going on, a year-end special, not only on the alert service, but also on a couple of my main classes that I offer up. One of them is on butterfly trading, which these three trades, this trade right here, this trade right here, this trade right here, those are all three butterflies, which are my main go-to trade that I make for income purposes. And I've got a deep dive class on that gets into over 10 hours of when to put on these trades, when do you get the best reward to risk ratio, which gives you, of course, the best possible chance at profitability. Doesn't guarantee profitability, of course, but gives you the best chance at profitability. How do I adjust these trades if the market moves down on me big time or if the market moves up big time? How do I go about adjusting those trades to keep them in what I hope to continue to be a profitability zone? Then there's also a 10-plus hour deep dive class on calendars and diagonals, which the calendar is one of my favorite earnings trades that I make on stocks going into earnings, and I explain a lot about that. That actually was this trade. I take that back. That was not this trade. This trade was not done on earnings. But anyhow, I will often do those around earnings, and I found it to be my most beneficial trade around earnings, and I get into all the when to put those on, what's the setup, if the earnings go against you, what are the likely ways of adjusting that to either reduce potential loss or dramatically increase profitability in that trade as the market shifts around it. And then finally, if all of this is Greek to you and you're not sure what I'm even talking about, I have a beginner options course that literally takes a person from start to finish on what is an option, for example. How does that option work? All of those different details will be incorporated as well. And you can see on the screen here, I've posted basically a screenshot of the different offers I have available. All of these are discounted right now through the end of the day on January 1st. Now that we got that out of the way, let's take a quick look at the different positions. And again, this is a butterfly that had been adjusted a couple times. I have an order waiting out there right now to close a portion of this trade. So if we get a little bit of a move up here over the next few days, this T0 line, let me get back to my drawing tool here. This T0 line will start to arch up a little bit. And as that arches up, that's profitability coming into that trade, and I will thin that trade out. Basically, reduce my downside risk increase my upside profitability potential by thinning out some of that trade and then letting it continue to age going forward further. Now, this trade in waste management, this is a trade that kind of went south on me. I was betting on waste management bouncing off a support line. It did not. It broke through that support line. So this started off as a bullish trade. After it broke through the support line, I turned it into a bearish trade. And again, part of the alert service, I shared that adjustment, why I was making the adjustment, all in a video so that students can see exactly what I was doing, why I was doing it. At the time I made that adjustment, this trade was down $1,100. We can see it has improved. It's still down, but it's dramatically improved its P&L profile. I have an order out there right now. This little icon here tells me I have an order waiting out there. That order is going to add in a put spread that's basically going to flatten my deltas here. So what that means is I'm essentially reducing my risk significantly on the upside. So if waste management were to rip back up, I'm not going to suffer as big of a loss. And if it just chops around in about a 10-point range here for the next week or two, this will work into some decent profitability for me. That's my game plan on that one. And again, all that's spelled out in videos that the traders follow. The next one, this butterfly also, it's down slightly right now, but this butterfly I adjusted to be more bearish in nature, and it helps offset the bullishness of this one and the slight bullishness of this one. The goal here is to balance out different positions that I have on so that if one is up nicely, the other might be off a little bit. But in all these cases, what I'm really banking on is I'm waiting on time decay. I'm waiting for theta decay to kick in on all of these trades and bring profit into them. So if I can keep these trades in a relatively what I'll call neutral area, a couple of them are bullish in nature, one of them happens to be a little bearish in nature, but if the market stays in this general range of 200 points up, 200 points down, which is the likely scenario, then again, these are just going to, time is going to decay on these, profitability is going to creep into those. That's what I'm looking for. This trade in SQ, this is a long-term, what I call a leap, where I bought an option 2 years out and not doing anything on this one except letting this one run a little bit. And I do have a game plan on that I've shared with students, which I'll get into more as this trade develops. And then the FTNT, this is a wheel trade where I am selling puts to hopefully get this stock put to me at some point. And I've now rolled this. I've rolled these puts, I think, if my memory serves me correctly, 6 times. And once this one decays, if it decays and does not pull back to that $93, my profit will be up over $3,000 in this trade, and I've never held a share of stock yet. So what that means is if this stock were to get put to me, let's say the market pulls back here to the 92.5. If the stock were to get put to me there, I'm selling 2 puts each time. So if the stock were to get put to me, I will basically have lowered my cost basis by $15 per share. So the $3,000 that I've taken in, and divide that by 2, so that's 1,500. Of course, as most people know, an option represents 100 shares of stock. So divide that 1,500 by 100, that gives me $15. So if that were to get put to me here at that 92 range, you can take $15 off of that, meaning that my cost basis is actually, what the heck would that be? 80, I don't know, it would be a lot less. So basically, my cost basis would be much lower if and when that stock got put to me. That kind of gives you a rundown of the existing positions. Again, if you're the type of person that has an interest in this type of content and understanding how a trader adjusts positions, when to put on positions, when to close positions, etc. And I just want to be clear so that everyone understands, this is not day trading. I am not in a position and out a couple hours later. This is something that someone can check in on in the morning. They can check in on it in the afternoon. That's what I do. I'm usually in my office for maybe an hour in the morning. Then I go out and do a bike ride, play pickleball, hike, whatever. Then I come back and I check about an hour before the close, and I may or may not make an adjustment. I'm really only entering a new trade maybe once a week. I might adjust one or two a week, and then I might exit one or two a week. And all of these are put out there with limit orders that I'm waiting to get hit. Sometimes they might get hit within a few minutes. Sometimes they might not get hit for a day or two. So none of this is what I would call extremely time sensitive. It's designed specifically for people that don't want to be tied to their computer day trading the markets. Now, I did that for a number of years too. There's nothing wrong with that. Just not for me anymore. I want to be out and about and doing other things at this stage. Thanks so much, everyone. I appreciate you checking in. Again, be sure to check out those special offers I have going for the next few days. Take care.